Greetings, this is Jeff Scott. This is July 17th, 2016. This is my weekly review. I've entitled today, Climbing a Wall of Worry. Special welcome to those of you that are new. Please don't get scared away by the vocabulary. We do have some unique names for our indicators, but everything over time is explained, and there are variations of things that you probably already use already. Disclaimer, this is for education purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I am not affiliated with any software vendor or trading companies. Tools I demonstrate are those that I use. I have paid for all these by myself. Nobody pays me to hawk their software. When I offer special prices on third parties, it's because I've reached out to them because I've had some volume interest. And rather than get paid a percentage of what I sell, which was what people do in this industry, I ask them to pass it on as a discount. Trading involves risk, and you and your loan are solely responsible for any investment decisions you make. I always entitle my programs, Be Your Own Guru. I think it's important to take control yourself and not to rely upon others, including me, to tell you what to do. You notice I don't come on midweek and tell you it's time to sell. I try and teach you how to have a trading plan and how to make rational decisions on what you buy and when you buy them and when you sell them. But you make your own call. You are fully responsible. I am based on a base knowledge platform based upon the teachings of William O'Neill and Cancelim, improved by Morales and Katcher with these two great books who brought us some of the things I use daily, such as Bible gap-ups, pocket pivots, Punch Bowl of Death, great book on short selling. Ian Woodward, may rest in peace, we lost him this year, was just a great teacher, trader, trainer, mentor. He listened to O'Neill for years and developed a style that was very much Cancelim based, but his own little twist. And those of you that know Ian know he had his own special twist, which is what made Ian such a great teacher and so much fun to listen to. Ron Brown is partner in crime for Woodward and Brown Investing, and they really took Cancelim, partnered with George Roberts of HGSI Software, and made it electronic and made it better. This is George Lee, one of my trading buddies and friend from Canada. And this here is a book from Van Tharp. Tough, I won't say tough reads, just big reads. Really the Bible's about position sizing and money management. And then this is my other axis of trading knowledge, which is John Person, author, trader, trainer, mentor, friend. And I walked into his office when I moved to Florida, and we've become fast friends ever since. I've been using his stuff for a decade. What I like about John is his things never change, and when you develop something that works, as did Ian, you don't need to have a new product every year and changes every year to charge money for. You just teach people how to use it better and better and better. Highly recommend it, great books. The book on the right, I believe, is being rewritten as we speak. I have lots of programs. I try and remember to hide my desktop because at the end of the day, if my wife forced me to have a small computer with only a few programs, I'd have TradeStation and Thinkorswim. To me, Genesis is a luxury. It's a great scanning and charting platform, intra-day and end of day. And I think it adds to my value proposition of how I trade and what I use. But I know it's expensive. Not everybody has it. My end of day and delayed data analytic tools are HGSI and EdgeRater. I like seasonality. Those that watched last week, we had apparently Magenta went through some updates that caused some issues with some of the passwords. I had it fixed. Of course, when I tried using it during the program, I had some issues, but that was because they had made some changes. All set there, and I follow a number of websites. For those that are new, and again, I get no commissions. I don't get any bonuses. I don't get anything by you buying these things, but I like to, as I said before, I win by you buying these software because it keeps the vendors in business and it gives them incentives to update, improve, and help me better by making their products better. Here's the website for HGSI, highgrowthstock.com. Key points here is Gil Morales talking about how he uses the program. Free 30-day trial. They don't even ask for your credit card. And if you go under investing strategies, you'll see every movie that I've done in the last several years, as well as movies from Ron Brown as we try and teach people how to trade using our favorite tools. As I've been talking about for the last several weeks, John Person has a big seminar coming up. I know I've got 6 or 7 commitments. I can only take 10. You're not committed till you got your checks. In case you're listening, I did receive checks from BC, from Milford, Michigan, PM from Bedford, New York, DT from Houston, Texas. And let me open up this last one as I'm sitting here. Make sure I got the right person I'm thinking of. And I got one from SD from Dallas, Texas. So those checks came in this week. Those who paid PayPal, I've probably already responded to you. Like I said, I'll take 4 more for mine. So John's seminar is for 3 days, Saturday, Sunday, and Monday. As you can see, it's $1,478. I have a special. I'm doing one for 1 day on Friday. No multi-day ones for me this year. I'll be speaking at John's as well. I'm charging $400 if you're not coming to John's, including lunch, $300 if you're attending John's seminar. And I'll talk about a special offer at the end. Stock patterns are cyclical. We have had a huge run. I'll show you some numbers later. But we're getting back to that point where you expect at least a pause to refresh. And so I would say we're at this left shoulder here. And the question is, are we just going to keep going higher? And are we really in the middle? Are we going to pause to go higher, or are we going to pause and pull back? But I think we are getting back to that place where it's a little tougher to trade than it was a month ago. How you trade really depends on where you think we are. So at this point, my portfolio got a little smaller in number of positions at the end of the week. I've raised a little bit of cash because I do expect to pause. But I'm hoping, as I'll talk about later, that what was huge resistance turns into support going forward. As I mentioned last week, I'm going to use these to do some education. And each week pick one of my favorite Ian indicators and sort of honor the memory of Ian Woodward through his teachings. This is actually my indicator, in that Ian had 5 of us. He basically managed us, but we did the work. And he assigned us, this has got to be a decade ago, to come up with a timing indicator that we thought would be good for buying and selling stocks, indexes, groups, etc., and to look at a long term and a short term. So we came up with the bongo. The bongo was defined here, and I refer to it often as a quick filter to see if we're in an uptrend or a downtrend. And what I really like to find are stocks where the bongo weekly is green, telling me that it's been in a long-term uptrend, and that when the daily goes red, and as it turns green again, tells me that it was in a pullback, and now it's going back in an uptrend. But I use it as a filter. I don't typically go long unless I have some good compounding or supporting evidence to go long in the setting of a red bongo weekly. And I look at the bongo weekly much more strongly than the daily bongo. So, end of the day week. Friday obviously was a tough end to what had been a great week. And one looks through, you see consumer discretionary healthcare weak, although biotech stronger than drug companies and distributors. Gold looks okay, builders mixed, REITs mixed at best, casinos weak, foreign markets weak. So this is sort of the opposite of what it was earlier in the week. As we'll see on many different views, the market started to slow down as we got into Thursday and Friday. If you look on the daily charts, you can see that we actually have, these are supposed to be red bars. This is the E-minis, NQ futures, NASDAQ 100, YM, the Dow, and then the Russell futures. And you could see we pretty much have, looks like we're pausing with red bars on everything and a gravestone doji on the Russell on Friday. The VIX is getting down to the point where it doesn't fall much further, and this is where you might expect to see the VIX start to move. But the question is, we don't know when it's going to move, and so I'm very hesitant to say anything about that. Notice that this line, this blue line here, which is starting to play, is the 1,000-day moving average. And you could see that the dollar just poked its head above its 200-day moving average. On the weeklies, again, the sense that what has been a very brisk run is probably slowing down, although hard to say that on the Dow futures there. The weeklies don't look bad. I mean, the weeklies look better than I think the dailies do because it was a positive week. As I said, the beginning of the week a lot stronger than end of the week. On the daily, weekly, and the monthly, this is the Genesis. We are in a buy signal on daily, weekly, and monthly. Rates rise, will bonds tumble? Well, I hope so because I'm short the TLTs. But you could see that this is a daily chart. Now, for all of these, when I talk about an indicator or what I'm measuring, in this case, the 10-year yield, the next one, the 30, the one I'm looking at is going to be in yellow. While the S&P 500 or the spiders will be in white. And I often look at the correlation between the two. So we did have a pretty strong bounce on both the 10-year and the 30-year yield at the end of the week. And that, if that continues, I'm not sure that's a bad thing. I think you'll see money come out of bonds and maybe go into stocks. But we'll see if it continues. We were at historic lows on the 30-year bond. Russell 2000 on the left, 1000 on the right, AD lines at multi-year highs. What's different this time is that the 2000 and the 1000 are both participating pretty equally. And especially if you look at the NASDAQ, where for a while it looked like, I did this wrong. Nope. The NASDAQ itself, broad-based, was lagging the NASDAQ 100. And when I look at it here on the daily, they're both at multi-year highs. Again, hard to be bearish on a market where your AD lines are setting multi-year highs. And if you look at the number of stocks above the 20-day moving average on the left, or 200-day moving on the left, and the 40-day moving average on the right, we're both, you can tell we're bullish territory. We're at the upper end, but we're not at the max level, so not totally oversold yet. 3-month new high, new lows. This looks at the number of new highs versus the number of new lows. Looking back, I think this is 13 weeks. And you could see we're getting up to the point where we are actually topped out and turned over. So again, not super extended based upon some of these other data, but clearly we've had a bit of a run as shown here on the short-term indicator. McClellan Oscillator, not overbought or oversold, but it does show that our participation is increasing in this rally. I look at the buckets. The buckets are looking at the stocks in the S&P 1500. I look at where they are within their Bollinger Band. 86% 2 weeks ago were at the market bottom, were below the lower band. Were below the midline of the Bollinger Bands. About 60% were below the lower band. At that time, I said the market's going to rebound within a couple of days. Here we were a week ago, and you could see we had rebounded nicely with 81% above the midline, shifting with a lot of stocks above the upper bands. And I talked about that might be sideways rather than a big pullback. And here we are today with 90% of the stocks above the mid band of the S&P 1500, yet very few of them at above the high band. How do I look at all this information? It tells me we've extended, we've had a big move. We probably need a pause to refresh. I think the charts are showing this. But we're not so extended that I expect a rip-roaring correction, barring news like successful coups. The Hindenburg is a signal which I'm not convinced it works anymore. I've tried looking at other indexes. This is something that Ian used to follow closely. It looks at when you get a lot of volatility in the market, new highs and new lows are both up. And what it really demonstrates, I believe, is could be best summarized by saying the smart money selling to the dumb money, we being the dumb money, and it's they're getting out when we're getting in, and it usually precedes a market correction. We haven't seen one in quite some time on the NYSE. We saw a couple signals in May before the market had some weakness. The Woody indicator, which will be looking at this period where my mouse head is clearly in control. The bulls all green after these series of big kahunas. So I look at the canaries in the coal mine, which you can see some of the leading stocks here over the last couple of years. And I use these as a signal of whether the market is breaking down or not. and you can certainly see the breakdown below the 50 in January really preceded a rather strong pullback in the market as a whole. They're still right about their post-recovery highs. Hard to say anything negative about this, except pausing here and letting the moving averages catch up, which is not necessarily a bad thing. So as we go into this week, I think I made loud and clear that I'm concerned that we've gotten toppy. I'm concerned that we need to probably pause to refresh. I don't know if that means we go sideways or if we see a pullback. And as I'll show you in the next slide or so, my hope is that some of these resistance lines become support. As I've said a couple of times, news right now probably not as big of a deal because the Fed's sort of handcuffed. But as we saw last week, they start to talk up interest rates, and that's kind of why the yield on the treasuries went up and perhaps the bonds went down. We get some continuing claims on the 21st, which is my 31st anniversary. And of course, keeping with my crazy career, I'll be out of town. Thank God I'm married to an angel. And you could see some of the other information about housing, mortgages, and the energy numbers, which have been probably more important than anything else if you trade energy or energy futures. Earnings pick up a lot this week. Here's my statement. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So if I look at Monday, Bank of America at the open, I have a position there. I made a decision about it on Friday, and I also got Netflix in the afternoon. I protected Netflix. I'm just going to let Bank of America run. I basically look at things. Sometimes I will buy puts. Sometimes I will sell the stock outright. Sometimes I'll sell call spreads or calls out of the money. And different things at the time of earnings to give me some protection on some pullbacks. I also want to look at seasonality calendars, and maybe we'll take a look at the Netflix if I remember. Market thoughts, we closed off fresh highs. Interest rate rise off of historic lows. I should say off historic lows. Off of, whoops. And I do that because some people may look at this and not have the sound on for some reason. Market looking toppy, may need pause for refresh as big money goes to the Hamptons for the rest of the summers. As market climbs the wall, worry which shock may knock it over. I mean, after hours on Friday, the market sold off about 11 S&P points on a Turkey coup, which failed. Is it the continued issues in Syria? Is it the crazy U.S. elections? Remember, we got some Republican conventions, so we may get some real zingers from the podium there. Terrorism in the EU, God bless France with what they're going through, and the Brexit realities. But more importantly, will a year of tough resistance turn into equally tough support? So here's a S&P 500. And this is a chart that I've been playing with the last couple of weeks, looking at from early in 15, the run-up, which was, you could see, kind of loose, and then somewhere in here we saw a market peak. And then what I've done is I ran some horizontal lines. Then after the sell-off, we couldn't get above this line. And what I basically was saying back when I drew these green lines was how we'd have 1, 2, 3, 4, 5, 6, about 9 attempts to break above resistance, and we failed every time. And this was after a 13.2% run here, a 16.7% run here. And I said one of these times, and I thought this time would be it, we would break above this resistance. And then if we get lucky, this resistance is support. I won't say I thought it would be. I thought it might be. I was optimistic here when we broke above the lower level. So now we've broken nicely above this resistance. So it'd be interesting to see if we get a pause to refresh, if we get some resistance or some support here at this old area resistance. My answer, I bet, is yes, but I'll let the market tell me, not just guess. And we're 8.9% on this move, which suggests we still may have some room left. So when does a bear market end and a bull market start? I don't think bear market rallies necessarily take you to new highs. We're at new highs, so I'm optimistic if I'm a bull. Intro comments, market review, top-down analysis, little bottoms-up, and chart of the week. I'm actually heading out of town today, too, so I probably won't go very long today. Pug user group meeting, we do these monthly. I'll send out a message when I'm going to do my next one. John does them as well. And what we really try and do is teach those people that have purchased John's indicators, and many of which also have HGSI, how we use them to make money. Again, the seminar, I mentioned there's a special offer that will come at the end of the day. You can pay for it with the picks that I give you if you're ever silly enough to take my trades. But if you were silly enough to take this one or the last one, you made some money. Charts of the week are presented for education purposes only. Trading, especially options, carries substantial risk of loss. I do not warrant any expectation return. I may or may not already have a position in stocks that I present. I plan on taking the trades that they execute so I can discuss, and I'm doing this not to show off or to provide stock tips, but to openly discuss how I use my tools to find a stock where I set my stops and when I take profits as an educational tool. Last week, we looked at Boise Cascade, which I thought was a paper company, but is a retail discretionary in the consumer discretionary group, a group which, by the way, was weak. You could see the retail discretionary group index is strong or was strong. This is a week ago. I liked that all my technicals up here were green. I said ignore the high jump because the stock's been in a downtrend. I showed it was at a mobile breakout from a squeeze on the prior Friday. Stuck its head above the 200-day moving average. A eureka in the market suggesting the market was in an up move. That was a strong eureka and a kahuna. When I looked at my trade station, I noted that it had a new PPS weekly and an HCD weekly, breaking through resistance on the OBV. OBV heading up on daily, weekly and the daily, in a PPS buy in the daily. I like this a lot. I said, let's go long on the white line at 23.95, stop at 22.15, target at 25.75. I bought the stock actually at about 24 because it opened up, pulled back right, and I moved my stop up when it opened up, and I got filled. My first target was at 25.75. So what happened, sometimes I guess you get lucky. This is the weekly bar on the trade. When I said to take the trade, and as you could see, it gapped up. You can't see it basically pulled back and got a couple cents above my SPY stop, but as I said, I moved the stop up and got filled, and the stock powered right through my first target, kept on going. So what have I done? I took off half at my target, moved my stop to break even, and I'm going to basically trail a stop up and keep some money in this trade. This is different than a lot of our trades over the last several months. The trades ran up to the first target, and that was it. My next target would be up here at the monthly pivot, which I can't really read it there. Let's see if I can get it out of. Hold on one second. It's the wrong stock. But that will be my next target on the actually, we're at that target now, so I'm looking. My next target would probably be 80, 26, probably the 27.50 range. But at this point, what I typically do is I brought my risk to zero, brought it up to break even, and I will trail a stop probably. I'll pick a percent and then ultimately make it a chandelier stop. Things I learned from Van Tharp. We'll come back to this week's choice and why I picked it. All right, let's take a look at the strength of the markets. Everybody knows I like to go into TradeStation where I combine some of my indicators, other people's indicators. So I combine 5 things. I combine the color of the bar. This is the Elder Impulse indicator. When the bar is green, the buying window is open. You should not be going short. When the bar is red, the selling window is open. You shouldn't be going long. And when it's blue, it's dealer's choice. I look at the green and the red arrows, which are the John Person PPS buys and sells. I look at the red dot above the price bar or a green dot below the price bar, which represent a screener that Elder has looking for MACD divergence. I also look at high jump bar, and I look at as I get above 95, I expect a pullback. And I look at the auto envelope, which is Elder's version of a Bollinger type band or volatility band. So I'm going to go quickly because it's similar, except I'll point out the differences. NASDAQ, buy on all three time frames. Green on the weekly and monthly. Short term, it's getting soft. Turn to a blue bar. And this suggests that we're oversold, overbought here with the red bars at the top of the price bands. That can go on for a long time. You can see back here, it ultimately triggered a sell signal and it took off. Notice that we're up at above the Bollinger Band, or the elder envelope, which also suggests that we should see a little bit of weakness here. Longer term, it looks strong. So short term weakness, longer term strong. The Dow looks better. It's still a green bar. It's a buy across the. You can see we're starting to get a little bit of divergence here. And it's at 99%, which means it's the highest extended on the high jump, or 99% of the highest it's been going back 200 bars. Again, why expect some topping action here? S&P 500, a blue bar. Everything's in a buy. It's at 98% on the high jump. And then the IWM, not nearly, I'm not as excited here. It's got a blue bar, it's got divergence, but it still is in a buy signal at 97. So how will I temper this? I would say that all these indexes look incredibly strong. The NASDAQ, with the blue and the MACD divergence, and the Russell using the ETF, are a little bit short-term weaker than the others. Clearly with high jumps in the 95 to 100 across the board, we've had a big run, and we are in a position where you'd expect either a pause to refresh for the moving averages to catch up, or somewhat of a pullback. My hope is that we pull back into area prior resistance and not pull back and have another test. Very quickly, materials. Doji here, everything looks strong. It's at 96 on the high jump. It's had a run, but still looks very strong. Energy, again, everything is green, continues strong. Financials, probably the big mover last week, had a big jump up. Brexit seemed to be a tonic to make the finances better instead of worse. Still looks very strong in all time frames. Industrials, a blue here. MACD divergence showing up on the weekly, still very strong. Look at that high jump bar at 98.78. Certainly is due a pause. Technology, ditto. High jump not as high, but we're getting those divergence dots in a blue. Staples, talked about this last week, getting above the band. I thought it would pull back or go sideways. It's gone sideways. Still in buys across the weekly, showing that MACD divergence. Utilities, again, when they got above the envelope, talked about sideways or a pullback, they actually triggered a sell signal, and it pulled back, or now a blue bar in the weekly. So utilities look the weakest of all the sectors. If you're a stock bull, maybe that's a good thing in suggesting maybe money going into the more risk assets. Healthcare has had a nice run, just like finances, maybe getting near the end, about 98% on the high jump. Blue bars above the envelope, just like I said with staples and utilities. Sideways to a small pullback might be expected. And then consumer discretionary, the worst of the bunch. A sell signal coming in after these days of the MACD divergence scanner. It's showing up on the weekly as well. Big run. Again, we'll see how hard it falls. So these are all easily obtained indicators combining some of Elder stuff and John Persons. Now let's go take a look at the market using HGSI. We'll go down to Ian and Ron's Woodward & Brown user group. And let's go into Major Markets Plus. And it's top-down view. So this is looking at momentum, mostly the last day, then a little bit the last week. And then a little bit the last 3 weeks. So what do we see? Interestingly, small and mid caps up at the top. Bigger stocks down, so on a one-day story, the bigger stocks were a little weaker. Gold, bonds near the bottom, dollar in the top third, as is biotech. Let's take a look at some of our favorites and just get a sense of the market. So there's no kahunas in days, so I'm going to get out of this and go into the cleaner view. Actually, I'm going to leave the Hindis on because Yeah, this is the Hindis and the bongos. Forget the Hindis. We don't have one to talk about, but we can talk about the bongos. This Hindi here, I mean, there's been some concern about your charts not looking at mine. I've got two different Hindis looking at different indexes. And the other thing is it's got a lot to do with where you set your indexing at and some of the parameters. And these would be on calculated things like groups, wouldn't be on an individual stock. So notice the weekly bongo on top is green, has been green pretty much since this rally started in March, with a little bit of a pullback here, where the daily bongo gave you signs of pullbacks in an uptrend where you might start to hone in on something and look to take it when it broke out. So S&P 500 at a new high. Let's give us some more charts space here. What's not to love here? The issue being when is enough enough and that it's going to roll over. Kind of a spinning top day on Friday. The Dow Jones Industrial, boy, does that look strong. Same type of a spinning top here, doji, whatever you want to call it, on Friday. Dojis don't have to break down. We're just getting a long ways from its moving averages, and a pause to refresh might be fine. And again, if we end up pulling back to this 18,160, 170 level, where it's prior resistance as support, that could really set up for a nice move into year end. NASDAQ composite, again, some small bars here. Looks to me like it wants to pause to refresh. Notice my bongo is still green. And then the Russell 2000, same old, same old. Again, looks like a pause is in order. So I look at the major markets, and I think we're going to pause. I'm not convinced that we're going to rock it down. Let's take a look at the industry groups as part of a top-downer. And I'm going to only look at the first couple of them just to review what I do. And then I wanted to do a couple of my scans that I do in TradeStation and scans that I do in HGSI. So we'll go through the first. I'll go through some of these. I'm not going to, renewable energy, if I make a change to industry group, you could see that there is force. This is the force up. Let me go back one. You can see we got down to 57. Last week, I think we were in the 80s. If I look at the 5-day force up, still a lot. We got 80 of them. So over 5 days, momentum is going up on 80 of the 170 or so industry groups. 2-day down, precious metals, large pharma, energy, bunch of energy stocks there. It's a very short-term indicator. 5-day down, healthcare, that's interesting. Medical equipment, refiners, utilities. But most of the stocks are 2-day up and 2-day and 5-day up. Let's just look at some of these groups. So renewable energy, this is a stock I don't know anything about, Ocean Power Tech. It was a cheap stock that's a lot less cheap. Let's put all my indicators on, and then very quickly. On the top, the first thing we have, which I'm going to make a little thicker right now, is a weekly bongo. Then I have a daily bongo. We have our force. Now, somewhere in here I lost something, so let me see if I can't find it. There it is. This is accumulation distribution. So you got a bunch of green there. Then you got the 2-day, 13-day force, the 2-day force, the high jump bar, Bible gap up squeeze, MOBO line. The same moving averages I always have. The 200 is in red, simple, 50 simple in blue, 17 simple in green. The T line, the 8-day exponential in magenta or purple. This brown bar is the group strength. These dots are Wilder's PSAR. Pocket pivots, if you have any, show up here. This is the volume window, OBV with the moving average. The green and red are Eurekas and Phoenixes, and these are Kahunas on the bottom with regular volume windows. So we had a giant move this week on a stock that turned green. I have a hard time buying these because this is what it will look like in a couple of days. Plug. And let's go back a while. When these things do this and they have massive volume on a stock that's never had much volume, these have become great shorting opportunities. Yes, we might have just discovered the next greatest thing ever, and I'm wrong, and I apologize, and this is the stock that you want to put all your money in. I'm just betting that the smart guys were shorting this stock after it ran up, but we'll see, and I certainly wouldn't chase after it now. Let's just look at some volume numbers. So the volume is going to sit, just watch the volume. 27 million on Friday, 8 million on Thursday, 67,000 on Wednesday, 85, 97, 108, 1.2, 56, 91, 67. Something's going on, and maybe it's something great, but boy, I get nervous when I see moves like that. I certainly don't chase them. And that's pulling up the whole group, and that's why it's first. Diversified banks. A lot of the earnings are out on these banks. Bank of America on Monday. Citigroup, nice move off the bottom, still has to get above the 200-day moving average. This has been a group that's been weak for some time. Notice the weekly bongo has just turned green. JP Morgan had great earnings, pumped above its moving averages. I think last week I said this was the best looking of the bunch. Everything's green up here. It had a pocket pivot on earnings. OBB looks good. I wouldn't mind owning JPM, 3% dividend. I own some Bank of America. I left it in play. Why do I own it with the bongo red? Because I had protection against it in the past. I probably shouldn't own it because it's in a downtrend. I don't think I'd be buying it here, but I'm going to play earnings roulette on Monday. It pays a 1.5% dividend. We'll see. All right. Wells Fargo was the one that I think disappointed and therefore didn't make the two-day up list. All right, so that's big banks. Little banks. Look at a couple of these. Again, all been in a downtrend. This one gapped up above with pocket pivots. This is U.S. Bancorp, 2.4% dividend. Earnings July 15th. Regions, July 19th, broke above. So these might be time to play. Why? If you don't know which one to buy, whoops. Hold on a second. Never want to see that sign because that's going to kill my performance. I don't know what that's all about. This is KRE. This is a spider of the regional banks. I play this one. It pays a dividend, I believe, but more importantly, it's a way of playing a basket of these regional banks. Biotech. These have been beaten up. Starting to see some upgrades. If Hillary wins, I worry about healthcare because I think, not that it's necessarily bad, I worry about their stocks, and I would expect her to really try and revamp the payment system and go beyond Obamacare. But Biogen just went to a weekly bongo green, broke above the 50, a couple of pocket pivots. OBV is strong. Biogen's always been one of the leaders. Gilead had a big day on Friday as well with the pocket pivot. Everything's green in a mobile breakout. Regeneron, another leader down near the bottom, a good day on Friday. So all these are in downtrends. They're all below the 200-day moving average. Celgene, which I used to own, similar, gave up most of its gains on Friday, but still was up 1.4%. So is something happening in biotech? I think so, but I don't want to play individuals. I actually bought LABU at 27, and it doesn't look like much here, does it? What it looks like is a stock that keeps hitting about here and then rebounding. So I'm in LABU to see if I could play this off the bottom. Keep in mind that these things move fast and vicious, and the reason why it's so compressed is it used to be a $240 bull. I think that's because of some splits, and we'll see what happens, but I'm going to play the biotechs that way. Airlines have been weak. American Airlines had some good earnings, had a big gap up here, still way below the 200-day moving averages. As you see, United Continental, Alaska, Southwest probably has the best chart of the bunch. Notice the bongo just turned green. If I wanted to go dip into airlines, I'd probably be paying a Southwest. Steel producers have been strong. Take a look at U.S. Steel setting certainly a recent high, taking out the August 15th highs. Let me make this smaller. All right, so you have to go back to about a year ago before we were higher. Look at the group strength. Been along in this one for quite some time. Anything else here? Because there's one I don't know anything about, ternium, but it showed up in a couple of my scans. Looks like it's obviously at a double top here, but if it can break above this, it's got great earnings per share growth and pays a 4.2% dividend on a group that's a lower left, upper right, sitting at the top of its range on a group. So that's where some of the strength is. So the way I do my trading or my prospecting is I will come into the market every day. I will go into HGSI and I will do one of the tricks that we learned from Ron Brown, which is called the group inclusion filter. And I will I'm going to go and do one for you, and then we're going to look at these stocks. 7.17. And I'm going to load a selection, which is going to be, hold on, where is it at? Hold on one second, I got to answer the phone. I'll be right back. Okay, I'm back. Sorry about that. I had to take care of something. I found what I was looking for. It's in roaming app, in my user app data, roaming HGSI user, William Brown, GSEL, and I'm going to go with the top 50 GIR with groups. And what it does is it automatically selects a bunch of scans that I like. So I'm going to make some changes because I use a different one sometimes. And then it will, let me take today's current group of stocks and take the Market Smith 250. And I'm going to call these July 17th All-Stars. And I'm going to create 30 securities. I'm going to hit OK. So what it's going to do is it's going to go into all my user groups, and it's going to tell me who the top 30 stocks are for July 17th. Well, here it's going to give a bigger list, but what I'm going to want to do is I'm going to run it. No indexes necessarily. So it gives me a report that tells me all the different groups that the stocks were in. But more importantly, it just created a group here. So let's take a look at some of the stocks that came out. So we can do a couple things. What industries are strong? They're all over the place. Specialty pharma, we got steel, packaged food, non-wood building materials, cement, building subcontractors. So wait a second. Wood building materials, steel, non-wood building materials, commercial residential building, cement, building subcontractors. I got a feeling that there's construction going on. All right, so we're going to look at these very quickly, and I'll just show you the kind of stocks that came to the top. Hawaiian Holdings, this is another good-looking airline. Its earnings are dropping, but they're still positive, way above its PE. Long-term uptrend, had a pretty big pullback, now backing an uptrend, had a pocket pivot on Monday. Bongo turned green. Shouldn't have dissed this one. That one looks good too. NetEase has been a big leader, pulled back some in the technology frame. Trinzio is a specialty chemical, lower left, upper right, breaking out to new highs, 2.4% dividend. Top Build is one of the engineering construction services. Bit of a flag here, moved up on Friday with a pocket pivot. Martin Marietta is a cement up at a high. U.S. Concrete, again, another cement player. Big run up, pull back, looks like it wants to go again. Supreme Industries, they make commercial vehicles, kind of at a multi-top here. If it breaks through here, that would be bullish. Lennox, again, involved in the building industry at near all-time highs. HD Supply, breaking out of a top it had back here in July. Actually, this one broke out on Thursday, and Friday followed through. I actually have a nice position there. Meet me, a young stock, big move up. It's had a big run, still cheap. Probably has more ways to go. China Lodging Group, cup, handle, breakout. Everything is green. This used to be called, it was biotelemetry. I can't remember what it used to be called. BEAT or something was they called it, the BEAT. Nice run up, little flag here. Continental Building Products, nice run up here, pullback, looks like it wants to run again. So what's the point of what I just did is I was able to find some of the best looking stocks in the market and do it with a simple test. I do that every night. What else do I do? So I would take these and I would throw these into file, a pentagroup, and I actually have a user group where I start to build my list. And we're going to call this Trading Base for Friday. I'm going to go to all user groups. And then some of my favorite scans, I'll go to my PSA reversals close at a squeeze. So I'm looking for stocks that have pulled back, are in a squeeze, that are about to have a PSAR reversal. I don't know if we'll find one today. Don't know anything about this stock. It's a foreign stock. But here's the pattern. Squeeze, basing, right below the PSAR dot. I don't like the underneath the 200, and I don't know the company. Toomey is a buyout. Leucadia is an IPO. FEI looks like buyout. Krispy Kreme is a buyout. Quest are a buyout. So there's none of them are going to make it today. So I get some great stocks there. I might look at stocks that are sitting right above free parking, which is the let me find them here. Hold on a second. All right, this is what I'm looking for. Stocks up, they're above 250,000 shares, above the 200-day moving average, within 1% of the 50-day moving average, which we call free parking. So this will be Energy Recovery. So here's a stock that's clearly in an uptrend, although it pulled back. It had a kahuna on Friday. It's trading right at its 200-day moving average. I'm not ready to buy that one, but I'd probably put it on a buy list, and if it breaks above that 50, I might be interested. So let's make this a little looser, go to 2%. Let's take a look at Spectra and the Carlyle Group. So uptrend, kind of, sort of, it's above the 200. It broke above its moving averages, had a kahuna. Kahuna Weekly, a Bongo Weekly turned green. It's a oil and gas play with a big dividend, limited partnership. I might look at that. And then the other here is Carlyle Group, clearly in an uptrend going back to the beginning of the year. Let's see if it's broken above its moving average. It has. Had a big kahuna on Friday, mobile breakout from a squeeze. Great earnings growth rate coming in. Pays a 6.3% dividend. I like that. Let's add that to my group that I might be looking at. So that would be the trading universe for Friday. What else do we got in my favorite scans? I might look at stocks that have gas in the tank. So these will be stocks that have great earnings momentum. So let's look at Paycom. So it's got earnings per share growth, has a big PE, nice uptrend. I've been in and out of this stock. I should be back in, but I'm not. That's a nice looking stock. Salesforce, similar pattern. Storm Ruger, look at the earnings per share, not so hot. B&G Foods, big run up, pull back to the 17. I might look at bongo stocks. These are stocks that are both fundamentally and technically strong. And I see some here that I know are very good. Maxilinear did pull back, had a big move this past week, a little flag forming. Bongo went green again. I'm back into Maxilinear. Look at the earnings it had. This is concerning. Those earnings are slowing down. Here's that ERII, made it to another one. Paycom made it to another one. So these are different scans that I do in HGSI that might find things that are interesting. Another thing I like to do is I like to do my scans in TradeStation. So I'm going to look at my favorite scans, and then we'll go to the stock of the week and talk about my special offer. So these are some of John's scans that come with his annual or lifetime purchase. PPS buy one would be stocks that are had a new buy signal. So I know Ironwood Pharma is one I'm interested in. And you could see it has a, let me just go through my chart here because there's a lot of stuff here and I know people are looking like, what the heck is he doing? And then I got to go jump in the shower because I got to go pack and I'm going to the airport. And I am running behind, but I wanted to get this done. And come on, format analysis techniques, are you coming? Come on, come on. I think I've got some issues because my memory's being gobbled up. Oh, come on. All right, I wanted to turn off some things here that you don't really want to see. Especially that one. So if they say JP, they're John's. If they say JS, they're mine. Simple. So here we have Ironwood Pharma, daily, weekly, monthly. It's in a weekly buy, a monthly buy. It's in a weekly buy, and it's now in a new daily buy. Like that. It's coming out. These are my dots. The top dot here says it had a MOBO breakout, a pocket pivot on Friday, and a MOBO breakout. It's in a squeeze. The PSAR just turned green, and it had a Kahuna force. Wow, I like that. OBV, not the greatest, but it did cross above its moving average and is trending up on the weekly. I like this stock a lot. Let's go look at it in HGSI and see what it looked like. IRWD. Sloppy, but nice uptrend off of 7.5, almost a double. Looks like it's breaking out. MOBO breakout squeeze. Pocket pivot in Kahuna. Everything looks green. I think Ironwood Pharma looks good. Burlington. It's already had a nice run, but at the top of this run, a high closed doji after a little bit of pullback and a new PPS buy. OBV is strong. I like Burlington. So PPS buy one it gives me a signal, daily buy while weekly is in a buy. PPS 2 gives me the signal, but I've got to be near support. So let's look at, let's look at Burlington. Support would be sitting, I guess it's sitting on the weekly support would be right down here on the blue. So it's within a couple of percent of support. Buy 3 is daily buy, hold on a second. Right, so 2 is weekly support and the weekly buy signal. Buy 3 means I'm near pivot support, so you'll have some overlap there. And then buy 5 is probably my favorite. We'll look at, again, it fits here for Burlington Industries, Burlington Stores. Buy when weekly is in a buy mode and volume is moving up, convergence. So I bet you, I'm just betting that if I go back to that list of that group inclusion filter, I thought Burlington would make it. Let's take a look at Burlington. I know Burlington's had a run and it's extended, which might be why it's not my pick of the week, but it looks like it wants to run again. So I use scans to narrow down the index, to the number of stocks to go look at. My favorite scan is HCD Weekly 1. and it looks for stocks that have a weekly high close doji. Now, when I combine that with volume convergence, that's when the world begins to play pretty music, because what I want are stocks that have had a high close doji, whose weekly high close doji, whose OBV is breaking out while the stock has pulled back. So let's look, and I'll show you a couple of the ones that I liked. I looked at these today. Let's try and remember which one stood out. That's North Star. This one's intriguing to me. I'd buy it, except I already did. So NRF in HGSI land, this is a stock that's one of those funny finance stocks that does something with mortgages, that has gotten killed and pays a huge dividend. Here is 12.7%. It's gone sideways for months. I've been capturing dividend while it's doing nothing. But look at what happened. We got a stock that's clearly been in a downtrend, had a weekly buy this week. It's in a daily buy, had a high close doji while OBV is actually heading up. Look at the daily OBV. It broke above its moving average. I like NRF, and that's what I want to search for. So that brings me to today's picks. So let me take them out of HGSI because I did them on a different computer. Let me show you the ones I liked and then the one I've decided to pick. Copy to clipboard text, and let's close that. And now let's go into Screener and Filtered Buys, and let me just clean this out. I'll just put it up here. That was a good one that got bought out that we had bought on this little exercise. So I'm going to finish by going through these. ATSG, Air Transport Services Group. OBV is strong on weekly and daily. HCD on weekly, stock in a downtrend. Reason why I didn't pick this as my stock of the week is it's starting to get a little bit extended. I want to make this smaller. There you go. You see it's had a couple months of moving up. CMO, this is one of those mortgages with a high dividend. Look at the power of this OBV on an HCD, a stock that's been going sideways. I like this one a lot. I think it's too close to NRF, which I already own, and Capstead pays a 9.3% mortgage. LNG, Cheniere, oil and gas, high close doji, strong OBV. It's already had a big move. Didn't buy it. CSTM is a little mining stock. It's less than $5. It's French, I believe. It's in the miners category. OBV breaking out to new highs with an HCD, or not to new highs, but to recent highs. PPS new daily. Bongos are good. It's a new issue. That's why there's no monthly bongo. This looks good for a cheap stock. AJRD, Aerojet Rocket Dynamics. High close doji, strong OBV. It's already had a move. Illumina, this is the leader in molecular oncology. I didn't pick it because I've lost money in it too many times when I've traded it, but a new HCD and a buy signal, strong OBV. OBV on the daily breaking above the moving average. It's had a run. Looks like it's flagging here. This might be a good one this week. Kronos is a specialty chemical company. Again, pullback, high close doji. I didn't like the OBV, so I didn't pick it as my stock of the week. I'll tell you what I did like about Kronos. Pays a 10% dividend and kind of looks like a specialty finance stock. Go figure. Mosaic, sideways, HCD, PPS buy, daily, in one weekly. OBV looks strong, especially on the daily. This looks interesting. We'll come back to this one. Pebblebrook Trust, also like this. HCD in a sideways move, moving up OBV. Pure A International, HCD, new buy signal, strong on the weekly, strong on the daily OBV. And then Universal Insurance, UVE, HCD, good OBV. So these, I'm not saying I'm buying any of these stocks, but these were some of the patterns that I like. Stocks uptrend, pull back to support, that have an HCD and a volume leading price. So let's go back to my presentation and let's bring this home. Charts of the week. Again, these are not telling you what to do. It's showing you how I think and what I do. It's for educational purposes only. I'm looking at Mosaic. Mosaic is a fertilizer stock. It's a specialty chemical stock. It looks like it pays a 3.8% dividend. It's been in a horrible downtrend, but what happened on this week is it broke above its 200-day moving average. You can see some strength in the group ring. It had 2 pocket pivots. It had a kahuna 2 days ago. Notice that everything is green up on the technicals. It's coming out of squeeze. It had a recent mobile breakout. You might say, but it's at the top of its high jump. And I would say it's in a downtrend. How is the stock extended from the 200? It's sitting on it. I don't use high jump in Dow trends. Let's look at TradeStation. I've got an HCD. I've got a rising OBV on weekly and daily. The histogram is showing convergence going up despite when this was going down. The HCD, PPS weekly buy, PPS daily buy. I like this. I'm going long at 28.75, stop at 26.40, risking a little bit over 8.2%. My target on a one-to-one trade is $31.10. I'll buy 850 shares for every $2,000 I'm willing to lose. And this will be a stop order I place on Monday. So here's your special plug. Again, I lose money on this. I don't get paid a penny, and I'm giving away things that are my assets. So HGSI Doc Seminar, it's $400. It's on Friday the 23rd. John Seminar, Saturday, Sunday, Mondays, $1,478. My TradeStation indicators, which shows all the things that had the JS, charting, scanning, radar screen. Who knows? They're priceless, but I'd sell them to you for $500, but I don't sell them to anybody, so I won't sell them to you for that either. John's lifetime indicator package is $3,500 and a year's worth of PUG membership. The value is $58.78. I think we can get this down over 25% if I can get a couple more people interested. So if you're looking for a package deal that will be a substantial savings, yes, it's a lot of money. It's 1 or 2 good trades. For newbies, and you'll go home on the 26th a better trader with the appropriate tools to enable your success. Thanks, everybody. Hope to see you in Florida. And on that note, I'll say good night. Again, and just for those that are still here, if you need to contact me with a question, hgsidoc@gmail.com. And again, none of the money except for $300 to pay for Friday's seminar will come to me. The rest all goes to your purchase of the rest of the tools. And hope to see you. Thanks, everybody.